Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started. Welcome back to another episode of Alternative Investments Chat. Again, today we're tuning into that real estate asset class. We've been talking about all things real estate. We've got, I don't even know how many episodes on it, but hopefully we've covered everything. And today we're continuing the conversation by diving into what a buyer's market is.
Yep.
We just recorded an episode on a seller's market. So listen to that one. Yep. And everything's reversed. So that's the episode for today. Thanks for tuning in. No, I'm totally joking. But there are some opposites, but we need to understand why, right?
Yeah, sure.
So what does it mean for buyers, sellers, and investors alike when we are in this buyer's market?
Yep, exactly. Well, a buyer's market doesn't always get the same dramatic reputation that a seller's market gets, but, don't be fooled. For buyers, this is potentially where great opportunity lives. So instead of gearing up for a bloody battle to the death of competitive offers, take a deep breath and take your time, because today the leverage has shifted in your favor. Let's get into it.
Woosah. So let's start with our definitions here. At its simplest, a buyer's market is when there are more homes for sale than there are buyers.
Yep.
So instead of buyers competing with one another, like we just mentioned, sellers are actually competing for those buyers. So it's seller versus seller, right?
Exactly.
That imbalance shifts negotiation power or negotiating power, and then buyers get more choices, more time, and definitely more leverage.
Yes, exactly. So some key characteristics here. Houses might sit on the market for a longer period of time. There are going to be fewer multiple offer situations. There's going to be more price reductions. And final sale prices could be, even below asking sometimes. In a buyer's market, the pressure flips. Sellers may need to be more flexible in order to entice buyers. It's basically a bunch of sellers that are screaming, pick me, choose me, love me, kind of like Meredith Grey. Grey's
in that elevator scene.
Yeah, begging. They're willing to bend on a lot more things in order to just get a deal across the finish line. And buyers, well, they get to be the star and have a lot of, sellers pining after them with a lot of different options.
They're like, look at me.
Yeah, exactly.
Hopefully, or maybe you haven't, but I think most people have heard about something called the migration mania back in 2021 and 2022.
Yep.
So after COVID hit, people started to pick up and move. With Arizona actually being one of those key destinations, right? I mean, who can blame them? Like, hello, look at our sunny weather, lower cost of living than most larger cities of our size. And with a bunch of people working remote, all of a sudden, this just freed up a lot of folks for a change, right? So they set out for the Great Southwest.
Yes, exactly.
Texas got influx too, but we don't live there, so we don't care about that. This sudden influx of buyers created the perfect storm for a very intense seller's market.
Yep.
So houses were selling super fast, sometimes within hours of being listed. People were paying over asking price, sometimes as much as $100,000 over asking, and local Arizonians began to fear that they were going to be priced out of their own market here in their own place of residence, their hometown. They're like, now I can't buy a house.
No, I can't afford to live here. How'd that happen? Yeah.
But this doesn't last forever.
Yeah.
So buyers' market conditions began to emerge and the market slowly began to cool.
Yes, exactly. So as mortgage rates rose sharply in 2022 and 2023, affordability took a bit of a hit there. Monthly payments jumped. Buyer demand slowed, and listings began to sit longer. According to Redfin, by late 2023 and into 2024, price cuts became increasingly more common, inventory climbed in many metro areas, and bidding wars became the exception rather than the rule. And it's safe to say that sellers who jumped on the bandwagon a little too late were feeling like party guests who showed up at the wrong date. They're like, oh, I thought the party was
Today.
this Saturday.
Like, no, it's next Saturday.
Yeah, exactly. not really a lot of fun there. Markets like Phoenix and surrounding suburbs saw inventory start to rebuild a bit after extreme scarcity. And while prices didn't crash across the board, just the pace slowed down dramatically. And that slowdown gave buyers some negotiating power again. Homes that once sold in a weekend are now sitting for weeks or maybe even a few months.
Yeah. So how can you tell when a buyer's market is on the horizon? So let's start with months of inventory, or MOI. So this metric's telling us how long it would take to sell all current listings at the current pace of sales.
Yep.
So buyer's market, typically 6+ months of inventory. A balanced market is around 4 to 6 months. This is how long the houses are sitting. Seller's market, under 4 months.
Yep. Exactly.
Okay. So next up, then we have day on market. Days on market, not day. Well, maybe it's got one
Hopefully.
day. Yeah, days on market. In a buyer's market, homes are sitting longer. We're talking 45, 60, sometimes even 90+ days.
Yep.
And that extended timeline creates leverage for buyers and stress for sellers.
Yeah.
And another huge indicator, price reductions. When you start seeing price improved or motivated seller language everywhere, that's a strong sign that the market is shifting, which I've definitely seen. Again, we've talked about this many times. You just bought a house. I'm looking for a house and I'm on Zillow and I'm like, it's like price cut, $50,000.
Yeah.
And then I'll go and look and see, well, it's only been on the market for a few days. Why? What's wrong with this house? Why are you dropping the price? What's going on?
Good question. Well, my mom would say that a lot of people are just don't know how to price houses right now.
That's exactly what it is.
We had that huge boom that happened. People got used to super inflated prices, and so they're pricing things like crazy, meaning, things are going to sit.
And also people, when it's yours and you're going to sell it, you always think it's better than everyone else's. And especially during that time, like their neighbor sold their house for, really high because that was what the market was asking. And so like, well, I should be able to get, well, my house is nicer than their house. So yes, they price it at that same price and people come in and are like, no, thanks.
Yeah, exactly.
So.
For sure. Well, then, of course, another thing to keep an eye on here is buyer behavior. Instead of waiving inspections, buyers are negotiating for repairs. They are asking for closing cost credits. They're requesting rate buy downs. And they're walking away if a deal just doesn't fit just right. They get to be a little bit like Goldilocks here. And contingencies, they come back into fashion. Buyers also feel different internally. Instead of the stress and anxiety-filled roller coaster of a seller's market, buyers may feel a bit more sense of zen. They have time. They don't need to panic thinking that they have to make a decision right now, or this house that they kind of like is not going to be there anymore.
Yeah.
They could sit on a house for a week or two, go see it a few times, really consider if they even want to make an offer, which is optimal, I would say, for a buyer.
Yes, especially that time, and you don't feel that pressure to quickly make a decision, because that's when you buy something you don't like and you get it home and you put it back on and you're like, why did I buy this?
Yeah, or you overpay like crazy and you're like, I got a bad deal.
Exactly. So economic and legislative factors also play into buyers' feelings less pressured. So from a bird's eye view, buyers' markets often form when affordability tightens. So rising interest rates are a major driver.
Yeah.
So when borrowing gets more expensive, as we well know, fewer buyers qualify and demand pushes back up.
Yep.
I would love to buy a house, want to buy a house. Interest rates are not going to let me buy a house. That's not me right now, but it definitely could be, right?
Yeah.
So according to Freddie Mac, mortgage rates more than doubled from pandemic lows, dramatically impacting purchasing power. So economic uncertainties also play a role here as well. If consumers are worried about job security, inflation, or just the broader economy, big final decisions like buying a home often get delayed, right? So at the same time, new constructions or delayed listings from earlier years, which we've talked about, can add supply, tipping that balance further into the favor of the buyers.
Yep, exactly. And new policies can also affect these market conditions. In the U.S. overall, we have a shortage of housing, especially at affordable price points. According to Goldman Sachs, the shortfall is as much as 3 to 4 million units. Crazy. Yeah. That's a lot of houses. And this is due to a lot of different reasons. Long-term underbuilding, rising labor costs and constraints, more restrictive zoning, and homeowners staying put. A shortfall of homes contributes to a seller's market, but some legislation is trying to increase the supply of homes, which over time might lean it more towards a buyer's market condition. For example, in December of 2024, the New York Council passed major citywide zoning changes estimated to support construction of over 80,000 new homes over the next decade. There's also included legalization of basement units and accessory dwelling units, ADUs, plus funding for more affordable housing infrastructure. And it's possible that we're going to continue to see more of this legislation pop up throughout the United States. Obviously, we know New York is one of the most populated, smallest cities. It's very, very dense with people. So this is a problem that persists there very strongly, but we might kind of see other large cities who deal with similar problems follow in their footsteps.
We'll have to wait and see. But so what does a buyer's market mean for real estate investors? Again, we always want to let our investors know what's going on for them. So for acquisitions, this is where things get really interesting. Investors may find better entry prices, less competition, more motivated sellers, and improved deal terms. So this is often when disciplined investors go shopping. Again, it's like, oh, I got my time. I've got the whole store to myself, and they've offered me a glass of champagne, and no one's being pushy. That's when I like to go shopping. There's only time when I want to get off my couch, right? So sellers may be willing to carry financing, offer credits, or accept longer due diligence periods. And then REITs may take time, this time as an opportunity to expand their portfolio, feeling like they can get good deals because they can scoop all these little properties up for much cheaper because 20 people aren't going,
clamoring head-to-head.
Fighting for them.
Exactly. Well, that said, exits can be tougher during this time. If you're trying to sell in a buyer's market, patience is key. Liquidity, it slows, pricing expectations need to adjust, and over-leveraged investors may feel pressure because they have a time crunch coming up. They got to sell. For some deals, the exit timeline might creep up smack dab in the middle of a stagnant market. And for investors, this could mean a smaller profit margin if you do decide to sell, or potentially a longer holding period. So if you're involved in a deal and let's say you're involved in a private equity deal, well, the partners get to make the choice when they exit and when they don't. The general partners do. And that's not up to you, girl.
Nope.
So you're just hanging out, and they might say, no, we're going to wait and ride this out because we know we can get a better price for this. And then maybe you're waiting on a payday and it's not coming.
You're just along for the ride.
Yes. But all in all, here are the maybe winners and losers in a seller's market. Winners are going to be well-capitalized buyers with those deep pockets, and they're prepared. Long-term investors, first-time home buyers who were previously priced out. This is a good time to go shopping. And the losers would be the over-leveraged sellers who are panicking, needing to sell ASAP. Investors who are relying on rapid appreciation because, well, things have slowed. And speculative flippers without a pricing cushion who need to get selling right now. Need their money.
They need the money. So at the end of the day, neither market is good or bad. Again, there's great things for both sellers markets and buyers market. They just are, rewarded different strategies. That's all there is. So understanding where we are in the cycles is what separates reactive investors from the prepared ones. Okay. So are we in a buyer's market right now? Nationally, is there some statistic to point to this leaning this way? There are stats that say, yes, we are in a buyer's market. Sellers currently outnumber buyers in many markets. So new data from Redfin shows roughly 47% more sellers than buyers as of December 2025. The largest gap on record since all the way back to 2013. So this is good. This is good for me, the buyer, right?
Right.
So when sellers exceed buyers by 10% or more, that's typically what constitutes as a buyer's market because buyers hold negotiation leverage. Inventory has been rising. That's another thing that makes it a buyer's market. The number of listings on the market has increased for many months. So according to Realtor.com, December 2025's monthly housing market trends report, that's a long one.
Yeah, it is.
December was the 26th straight month of rising inventory. But there are also indicators that point towards a balanced market, which is really what we want. Home price growth is slowing or cooling in parts of the country. So some reports show modest price declines or slower appreciation in average U.S. home prices, which is a sign which is a sign, there we go, supply is catching up to demand.
Exactly. So it's not cut and dry like most things in life. It's a little gray instead of black and white. And if you tuned in to our Sellers Market podcast episode, there's also signs that point to a seller's market too. So we have a lot of different things that are going on in the pot here. Realtor.com forecasts that the national housing market will average about 4.6 months of supply in 2026. This is right in the balanced market zone between 4 to 6 months. A true buyer's market really begins when supply climbs above 6 months. So things are just wishy-washy. Again, it also depends on where you are and what's going on in your particular market, where you're buying a house. Also, modest affordability improvements can give buyers a little bit more negotiating power than they had during extreme sellers markets of the previous decade. Something to note here, Fannie Mae, one of the two government-sponsored entities, or GSEs, that help support U.S. conventional mortgage lending, recently eliminated their rigid minimum credit score requirement. It was historically 620. Now, instead of the automatic denial, if you submitted and you had below a 620, boom, you're out. Well, now the entity's automated underwriter system is looking at more of a full borrower financial profile, examining things like income stability, debt levels, cash reserves, payment history, etc. And this could mean new buyers entering the market with more power than before.
Yeah. So nationally, we're actually closer to balance than we've been at in years, which already gives buyers more leverage than they've had since pre-COVID, right? So looking ahead, forecasts point to a more stable, slower growth market. Outlook, not the email thing. We talked about this in another one. The Outlook is a report put out. They covered. It says that modest price growth. There's modest price growth.
List now?
I do.
Modest price growth.
Modest price growth of 1 to 4%. Gradually easing mortgage rates, sales volume recovery, inventory improving, but still constrained. So this is not a crash scenario, okay? This is a healthy reset. This is what a healthy reset actually looks like.
And you know, the market, it does this
everywhere, but
this is what happens.
Roller coaster.
Yeah. So whether you are buying your first home, adding to a portfolio, or just watching the market from the sidelines, a buyer's market is all about leverage, patience, and perspective. And for investors, they're often when best decisions are made quietly and not emotionally.
Yeah. Basically, understanding the cycles is absolutely everything in understanding these markets. So thanks again for turning into Alternative Investments Chat. Don't forget to like, subscribe, leave us a comment, see us on YouTube, all the things, and we'll see you next time.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments Chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.